Hello, everyone. Welcome to today's live session. Apologies, we're about 90 seconds late today, so I had a few technical issues. And also, apologies for the sound quality from Monday. I played that back afterwards. I don't know what happened with the microphone. These have been working fine for ages, but we had really poor quality. So I'm just checking that everything is okay on this one. So if there are any problems, just let me know through the chat. I think for some reason it was picking up some other microphone and not the one that is an inch away from my mouth. So hopefully everything's all right today. Let's just put the risk warning up. Of course, you can ask any questions while we're going through this. So feel free to fire in any questions via the chat. What was I going to say? We do these 3 times a week. So Monday, Wednesday, Friday. We take a look at the major markets. So we'll have a look at the euro, the pound, gold, oil, stock markets as well. I think it's been a bit of an odd week so far, but I think stock markets have been interesting, and I think maybe they're the ones to watch for the rest of the week. Today, oil is an interesting one, but we'll come to that in a second because we've got the oil inventories out this afternoon. Just a quick plug as well for this. If you don't have an account, we're doing a promotion at the moment. If you open up a real money trading account by going to Capital.com, David, the link is in the chat on the right-hand side. I'm doing 30-minute one-on-one trading strategies sessions via Skype. So that's if you don't have an account, you can open one through there. And of course, we're doing our Heathrow seminar this Saturday. I think we've had a good response so far. I think we've got about 10 places left, 10, 15 places left on that, free of charge. I'll put the link in the description of the video afterwards. And that's from 10:30 till 4:30 on Saturday. So just a quick reminder of what's coming up. Today is oil, 2:30 this afternoon. Crude oil inventories, normally released on the first, not the phone I'm talking about, normally released every Wednesday afternoon. It's basically how much oil is stockpiled in the US. So we'll spend a bit of time looking at oil today. Then tomorrow, a busy one, European business confidence in the morning, US GDP at lunchtime. How well is the US economy doing? Then German inflation, 1 o'clock Thursday afternoon. Then Friday morning, German unemployment. That could be interesting because we had that weak German manufacturing data last Friday, and we had better business sentiment data on Monday. So that's going to be an interesting one, I think, 5 to 9 on Friday. And then 9:30 on Friday, UK GDP. So the UK economy is expected to be showing growth of about 1.3% for the year. So we'll see. We'll see what happens. Right. Let's get into it. So let's start with oil. I have traded oil this week. I've done all right, actually, on oil. And again, it still can't make any progress. It's a bit of a weird market, I think, at the moment. Let's just go back and remind ourselves of the bigger picture. Let's just take the indicators off for a minute, because what was the high? The high March the 21st was 60.41. Yesterday's high was 60.39. So it is a positive market. This recovery off those December lows is still going, but it just can't at the moment properly break through $60. We keep seeing these pushes up and through 60 and then backing off really quickly afterwards. And I've been saying for a few weeks now, I think if we're going to see oil start to roll over, maybe 60 is the level. Yeah, but so far it's really struggling. The trade I did this week, I always talk about these big levels, so hopefully it won't be much of a surprise. But it was it Monday afternoon? It spiked down again. We'd had these lows left. The really big level for oil on the short-term chart is $58 a barrel, and that's provided good support. We get these spikes off. But eventually the market snaps back, and I think I got in about 58.50 here in the next hour, and it started moving, and luckily it really got moving into yesterday's sort of lunchtime and just trailed the stop up. So I think that was a good opportunity, and I think for me the same for this afternoon. If you're something happened, there's someone saying that something's happened to my mic again. Is the sound okay at your end? I'm really not sure what's happening here. I don't know if it's like a dodgy connection or something, just to make sure the sound is okay. Otherwise, I'll switch it over to another mic. So if there is a problem, let me know. But I think for this afternoon, watch oil again when these inventories. Oh, you can't. Okay, hold on a second. Let me try and see if I can switch this over. This happened on Monday as well. I'm really not sure what's going on with this thing. Maybe my microphone is on its last legs. Okay, hopefully a few people are saying it's okay. I think it's maybe time to do a trip to PC World and get a new mic. Right. So I think this afternoon the interesting thing to watch. Thanks for all the confirmations. Good, it's all working again. So I think the interesting thing to watch this afternoon at 2:30, we've got these crude oil inventories. We can normally have volatility off that. I think there's a couple of things to watch. Do we get that? Is the outcome bullish, and do we get a move finally through 60 that holds? So maybe we get that. For me, maybe the more interesting trade is if we see it drop, about $1 or so, maybe into this afternoon, maybe on the inventories, and do we get another opportunity at 58? So at the moment, I think it really is a market that's trapped 58 to 60 and $1.50. It's tradable if you're sitting there and jumping in and out of it, but we just have a lack of direction at the moment. And I still think, I still want to be for the rest of this year a buyer in oil for like a longer term position, but I either want to see it start trading through 60 properly and stay there and then look to buy in, or have a bigger sell off and then a hook back up that brings the buyers back in. At the moment, it's a bit inconclusive, I think. But I think maybe that's the market to watch this afternoon, this and US stock markets. But I think they, for oil, because we've got the inventories this afternoon, let's see what happens. Does 60 get cracked properly? If it doesn't, do we have a sell-off again back to that 58 level that has been support for the last 10 days or so, or towards 58? So looking to be a buyer, for me anyway, with a stop the other side of 58. Let's see what happens. Hopefully it sparks things up a little bit this afternoon. If we go back to the daily chart and we look at the indicators, I'm sure it's going to be overbought. Yeah, it's been over. So this is on the dailies now for oil. It's the RSI has been overbought since since Jan. It's dipped in and out. Went back overbought again about a week ago. And we've arguably got a bit of bearish divergence building up here, where the market has sort of pushed out to the high again, but we've got a much lower RSI. So it is all looking a bit stretched. $60 psychological level. Bang. Let's see what happens. Let's see what happens this afternoon. So I still think we'll see the price of oil go higher this year. It's just whether in the short term from here we get more of a bigger sell-off. Okay, so let's see what happens. But one to watch, I think, for the rest of today, the oil price. Let's look at stock markets. Actually, no, let's look at gold first, then, because that's what we traditionally do, don't we, after oil? Then we'll look at stock markets. So gold is, I always say that the trend I'm interested in gold is this one, and that's it. That's just chugging away nicely. Nothing has changed over the last couple of days. We had the sell-off down to, in early March, down to 1280, 1275 is for me the really big level for the year. For gold, it's the lows for the year. At the moment, that trend is still going. For me, the obvious target are these highs from February, 1348. If it breaks through there, I think we can start looking at 1360, the highs from last year. So in a nutshell, any major weakness in gold for me at the moment is a buying opportunity. Only if it breaks below 1275 do I think we have to worry about a deeper sell-off. Let's take a look on the hourly chart and see if there's any short-term levels. So we've had this really great trend that's been chugging along on the hourly chart. It's still going. So again, if I was looking to short-term trade that, I'd be keeping an eye on that. So it looks something like that at the moment. So the trend line, when does that start? March the 7th. So we're 3 weeks into that nearly. So we got the trend line coming in, excuse me, about 1308, 1310. Today, it has held over yesterday's low. So yesterday's low, yesterday morning lows, around about 1312. It traded down to 1312 between 7 and 8 this morning. So for me, that's the first sort of really short-term support if you were day trading it. Much bigger support back here, the low, 1303. 1298, and then 1290, and then bang, 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 back we go. So we've got lots of support levels basically for gold. So for me, any weakness in the price of gold still looks like a buying opportunity. Not much to add to that. Okay, let's take a look at stock markets. I think it's been an interesting week for stock markets. If you looked at the net changes, you probably wouldn't see it, but Monday was it Monday? Yeah, Monday was a really interesting day. I think if you were sitting there trading it, it was an interesting day, because let me zoom in on the bit of Monday I want. So this is the S&P 500. Let's just take the old squiggles off for now. What was interesting about Monday? All right, this is where the market finished on Friday. So just to put things in perspective, we know what a strong year it has been for stock markets. Only last week, US market, well, the S&P hit fresh highs for the year. So clearly it was a market that's still very strong. But we did see quite a sell-off towards the end of last week. So I thought it's going to be interesting to see how this week starts, given it has been really strong. And what was interesting was so in the overnight market, the S&P traded as low as about 27.88, 27.87. So 27.88 and a half, 86 was our low in the overnight market. So for me, that was the level I was watching going into the official open at 1:30 UK time. So I think that was clearly the interesting area to watch. And what was interesting for me was how it started on Monday. So I was watching it and I thought, I've missed it. I've missed the move. Okay, so there was the overnight session, and this is the first 10 minutes or so of Monday's trades. Yeah, it just went up like a rocket right from the official open, and I thought, well, I want my stop loss down here below the overnight low. I've arguably missed the trade there, but we saw this incredible volatility. These are just 5-minute candles right at the beginning. So I did actually end up buying at 27.92. So it sold off really hard. So I bought at 27.92 with a stop loss under the low. It had a little look. Right, look at that. This again confirms to me how important these big levels are, these previous highs and lows. So we did sell off and faff around for a little bit, and then it got a move on. We saw this really big rally, and I think I got stopped out for a profit somewhere when it started coming off. So what I did, I just put the same order in again and thought, all right, if it gets down to 27.90, 27.92, I want to be a buyer. And bang, we had that later on about 6 o'clock on Monday, and moved back down once again. The big levels hold, and then it really started to build, and I ended up holding the position into yesterday. So we saw the market, as you can see, how this level just kept getting hit during Monday's session, and then yesterday it really took off. And let's bring it up to date. There we go. So I think we have seen a turnaround for the S&P so far this week. If I make this now a daily chart, here we go. That's not a daily chart. Let me flip this to a daily chart. So that was Monday, faffing around. An up day yesterday, and so far today it's a bit weaker. So I think that for me, going into today, we'll take a look at the Dow in a minute. Still looking for strength, I think, for US stock markets. So pushed higher. Last week, the S&P traded as high as 28.62. So really, that would be the target for a run back up to there. But let's take a look at some of the short-term levels. Then we'll look at the other indices. So the high from, when was that? Monday's highs up around 28.30, that sort of level. It has been selling off overnight. So going into today, for me, the level to watch, the first levels to watch, probably the low around about 6 yesterday, between 6 and 7 yesterday. The lows 2800, 2805. So for me, I think stock markets are trying to build something of a recovery this week. I'd be looking for a buying opportunity, and I'd be looking, the first place I'd want my stops is below that low from 6 o'clock yesterday afternoon. Let's take a look on the 5 minutes. There we go. Then we'll have a look at, here we go, it's down here. So it was the low for the day yesterday, 28.05. So it'll be interesting if we get much more weakness from where we are now. Do we see the buyers come back in? Let's see what happens. But for me, looking for that to hold after the turnaround on Monday. Let's take a look at the Dow, because the Dow has been a little bit different, really, to the S&P. Then we'll take a look at the NASDAQ. So let's just bring this up, because the Dow has not moved to fresh highs for the year. So we're looking at the daily now. Let's zoom in. So the Dow set highs for the year in late Feb, up at 26,245, 26,250, that sort of area. But so far this month, it's only been as high as 26,115. So it's interesting that it's lagging behind. But for me, I suppose that the big level for the Dow for me, the lows for March so far, around about 25,170. So we're currently about 400 points above that. Maybe, it has been an incredible recovery since December. These markets are overdue something of a correction. We haven't had anything in the way of really major sell-offs. The biggest sell-off we had in the Dow was earlier this month. If you look back at what it's done since December, the RSI is a bit in the middle, really. Nothing much going on there. The MACD is falling. Let's take a look at some of the levels to watch this afternoon on the Dow. So again, it's a similar one, I think, for the S&P. We saw this test 3 times of the old support, of the overnight support on Monday. We saw a good up move yesterday after and then selling off and setting a low. So this afternoon for the Dow, 25,550 looks like the level. So actually, it's not a million miles away from where we are now. It's only about 40, 50 points away from where we are now. Let's take a look on the 5-minute chart. So I think it's going to be interesting. So this is a level. So we saw quite a bit of to and fro from sort of 6 to almost into the close yesterday. So watch this level this afternoon on the Dow, 2550. So I suppose, if you were bullish, there's an argument for being a buyer now. If you thought, well, actually, at 25,595, I think the market's, let's say you thought the market was going to push up to 25,800. There's a couple of 100 points in there. And you could have your stop loss the other side of 25,550. So you've got, I don't know, 50, 60 points risk, let's say 60 points risk for potentially 200 points upside. So it's interesting. I think it's interesting to see what happens with these US indices when they officially open and how they react near yesterday's low. If those lows get taken out, I think the risk is we're going to pull right back into Monday's range again. So I think this afternoon, either way, should be an interesting afternoon because we are seeing in the overnight market, at least, pretty much this morning, we've seen the Dow drop 100 points since 9 o'clock this morning ahead of the open. So I think this afternoon will be an interesting one. So watch those lows, 25,550-ish, that sort of area on the Dow. So looking for the bounce. If it breaks below, I think we're going to open up a lot more weakness. Okay, so an interesting session this afternoon. Let's take a look at the NASDAQ, then we'll take a look at European markets. Let's have a quick look at Apple as well, because we had that announcement the other day from Apple, didn't we? So the NASDAQ has been the outperformer in the last month or so, I think, compared to some of these other US markets. Pushed as high as 7,500 just last week. Got clobbered on Friday. Again, it's starting to try and build it back this week. Still looks positive, I think. But again, if we look at the levels to watch, what are the levels to watch for the NASDAQ? Let's zoom it in. Again, I think we're looking at yesterday's low, aren't we? It's that low between 6 and 7. So around about 7,312 on our charts. So we're about 30 points above it at the moment. So yeah, so again, same story. See how it performs near yesterday's low. Let's have a quick look at Apple. Then we'll look at European stock markets. Let's have a quick look at that. So we were looking at this last week, weren't we? And I was saying that the trend is up clearly off these off these January lows in Apple. But I'd rather buy a pullback. And so far, over the last 3 days, we have had a pullback on Apple. I mean, clearly we got big support around about 169. These lows in March on the daily chart. Let's take a look on the hourly. So it looks like it gapped up. You see that gap yesterday? That is yesterday, isn't it? So on March the 25th, Monday, it closed at 188.63. Gapped up yesterday, opened at 191, but it sold off all day, which is interesting. We had that really bullish open and then just gave it all back and more as the day went on. So maybe there's a bit more weakness to come for Apple. Let's see how it performs today. But undeniably, on the daily chart, that recovery for the year so far is still going. Right, let's bring it over to the European markets. Then we'll look at FX. Then I'll get into the questions. So the DAX. So German index. So this is the daily. So again, we saw strength last week up to fresh highs for the year so far. Came under a bit of pressure, but the story this week has been of recovery. I suppose if we were looking at this trend, is coming under some pressure. This trend from late December, arguably a bit of support left here from Feb the 19th, around about 11,240. But let's take a look at the hourlies, because we are seeing a bit of a reversal going on today. So let's look at the short-term levels on the DAX. And this will be an interesting one on Friday when we have German unemployment data out at 5 to 9. So here's the week so far for the DAX. So it was, what was it? That was Monday. So we saw it gap lower on Monday. And that low in the first hour on Monday has been the support for the week so far. So Monday's low was 11,290. You can see yesterday on the open, it had dropped to 11,303. So great opportunity. That's our perfect Harry hindsight trade to go back and buy the DAX yesterday when it moved back to Monday's low. But that has proved quite pivotal. Pushed up. So we have traded as high as 11,470 this morning in the first hour. It's sold off, sold off 80 points since then. But again, assuming these lows in the US are going to hold from yesterday, you'd be expecting the DAX to snap back. Let's take a look at the really short-term chart. So, where would you buy? Arguably, it wouldn't be a buyer just yet. I suppose if you were going to be aggressive, you could pick up on these lows from yesterday morning, 11.30 lows, about 11.360. Market's 11.390 at the moment. Maybe see how it performs when the US opens. See if these old lows hold. But clearly, the big level for the week, 11.290 the Monday lows, 11.300 the lows from yesterday. And then finally the FTSE. Then we'll get into the FX markets. Hang on, where's my FTSE chart gone? Hang on a second. FTSE 100. Let's bring that up. I think this is interesting. I was looking at this on a daily chart today. I think it's interesting. Let's just take the indicators off for now. If we were looking at again the trend from, is it just after Christmas? We've got our trend looking something like that maybe. So looking at where we are now, let me just zoom that in. So this low, so from December the 27th, that's been our trend in the FTSE. Again, last week, or the week before last actually, pushed to highs for the year, up at 73.80, and then sells off. But that trend is still holding. So if you thought that trend was going to continue for the FTSE on the daily chart, I think it's interesting down here at 71.80-ish. We've got support, the lows for the week, 71.50, and then the bigger lows out here at 7,050. So if the FTSE is going to bounce, we're pretty much there. So maybe that's an interesting market, I think, maybe to keep an eye on from the bigger picture perspective. Let's take a look on the short-term chart. Here we go. So short-term chart, lows for the week on the FTSE, 71.50. We're currently about 24, 25 points above that. So again, it's going to be interesting. Do we see a bit of FTSE strength coming in off the back of US stock market strength this afternoon, assuming those lows hold? Let's see what happens. So plenty to keep an eye on. So for me, the market to watch this afternoon is oil, because we've got the inventories out, but also US stock markets. See if yesterday's lows hold. The euro, once again, has been confounding, I think. I got stopped out of the long I was in. So I bought it after the sell-off on Friday. So we had Friday sell-off on the PMI data. So I bought it with a stop loss under, I can't remember, under here, 112.50, whatever it was. No, it was low. It was higher than that, wherever it was, 112.65. It did push higher. It was pushing higher towards the end of last week, had another go this week, and yesterday it's just slipped below. So I think you could argue, if we take the indicators off for now, you could argue, sticking with the hourly chart, that the trend off those US interest rate decision highs is still just about down. So it looks like that. So if you believe that trend that's been in place since, when is it, last Wednesday evening, the rally we're seeing now in the euro is just a dead cat bounce, and we'd be expecting the euro to roll over. We've got the highs, some highs left from yesterday afternoon ahead of 113. Maybe that's one level to watch. But it's just again, it's just really frustrating. I should stop trading it when we get these trends that build, and it can't just hang on to recovery, and it just drops out again. So this afternoon, 113 for the euro. Let's see if that holds. So arguably, if you were trading with the trend at the moment on the hourly chart, we'd be looking to be a seller with stops maybe above there, maybe above these highs at 113.30. Let's see what happens this afternoon. If we look on the daily chart, it's just more of the same for the euro. We've just got this quite tight sideways range. It broke out of it in March. It snapped back into it. It's weakened again. We're just chop, chop, chop. So the euro now is trading against the dollar where it was 4 months ago, 4.5 months ago. So it's a bit of a choppy market, difficult one to call, I think. And the pound, I did a trade on the pound this week actually as well, which again off a big level, even though I think I said on Monday I wouldn't recommend trading the pound because so much of it is Brexit craziness. And look at the last 3 days. Look at this. Let me zoom in. Look at these last 3 daily candles. Look at this. I don't think I've seen that for a long time. I bet there's a particular pattern name for this. So we have the market. It's like 3 dojis, isn't it? For those of you who are familiar with candlestick charting, dojis, classic sign of market indecision, where the market trades up, trades down, closes pretty much where it opened, trades up, trades down, closes where it opened. And today, so far, it looks like it could end up being the same. But on the hourlies, this is where it's been interesting. Again, let's just take the indicators off for now. So the trade I did was, I think it was it here somewhere? Was it yesterday? Yesterday, I think somewhere. I can't remember. Yesterday, where we've seen 131.60 has been the no, it was Monday. Sorry, it was Monday. 131.60 was the floor Monday morning. Came back to it Monday afternoon. Holds, chops about, comes back to it again yesterday morning, and then finally gets a move on and rallies about 100 points. I should have had an order in again today to buy it, but stupidly I didn't. Again this morning it's come down. It's traded as low as 131.65. So it is pretty directionless. It's pretty choppy. It goes nowhere. Something political happens, then we get a move, then it goes back to being quiet. But so far on the downside, 31.60 is stopping any weakness. I suppose the risk is if we get a break through 31.60, because it's held so well this week, you'd expect quite a pronounced sell-off, because you'd expect there to be, or I'd expect to be, lots of stops below these levels. But it has been a completely directionless week for pound against the dollar. But I think I maybe got a bit lucky. I think 31.72 I think is where I bought it. So I got a bit lucky that it did actually not take me out and then spike its way up. But it's just really trapped. And of course, with all of the Brexit logjam and the political tensions in the UK, it's not surprising that we're not seeing that much really happen in this market. So let's see. Okay, let's do the questions. Let me just have a look and scroll back through the questions. Gold. We did gold, didn't we? We had a good look at gold. Trend still up, blah, blah, blah. What else? What's the quickest way of getting the oil inventories? I think someone had jumped on and answered that. But I mean, if you've got a news feed, you can get it. You can often see a bit like the payrolls. You can often see something of a headless chicken sort of response by the market when it comes out. Personally, I'm just going to be ready if it spikes down to the low 58s. I mean, Twitter's a good source. I think Twitter, for all its problems, Twitter is a good source of breaking news on financial markets if you follow the right people. So I never worry that much, to be honest, about the release. I always want to watch just what's the market, what is the market doing. Dollar Mexican, someone's asked for. Okay, so the dollar against the Mexican peso. We've looked at this in bits and pieces in the past, I think, haven't we? Let's take a look at it. Take a look at it now. here we go. So I think that is again maybe a bit of a frustrating market to trade, but from a dollar, so from a dollar point of view, 18.4 has been a good floor. That's going back to August last year, so that's been a pretty good floor. 20.5 clearly has been the top. Is that for me? And then it slipped down again recently, down to 18.7. I think to me, it's a bit of a directionless market, isn't it? You do get these good moves. Arguably, I'd rather be a buyer of the dollar at the moment than a seller. So if I was a buyer of the dollar against the Mexican peso, the closest I'd want my stop is below the lows from the 20th of March, so the other side of 18.7, something like that. So maybe we'll see it get back into this trend and have a run back up to 20. But it's not one I look at very often, but it's another interesting one. VIX, someone's asked for. Let's take a look at the VIX. Hold on a second. So the VIX is a market we've added in the recent weeks. So the CBOE volatility index. For those of you not familiar with the VIX, it's derived from options prices on the S&P 500 index. It's often referred to as the fear index. So when the VIX is high, like here in December, it means you're paying options have got relatively more expensive. So people are paying more for insurance to insure their risk. And when the VIX is low, like it was back here, October last year, down at 12, options are cheap. So there's not much fear in the market. So it does tend to be reactive. You know, clearly when the market, if the S&P has a big fall and looks like it's, you know, the potential for a bigger sell-off, the VIX will start to jump. Okay, so that's that. So, but it's pretty low at the moment. You know, it's ticked up a bit over the last week because we've had a bit more in the way of volatility, maybe, but nothing really drastic. So trading around just above 15.5 at the moment. Okay, we did the okay. Someone's asked for the FTSE and the S&P. We did the FTSE and the S&P. So if you missed that, you can watch the recording and go back and take a look at that. But we haven't done sterling yen, so let's take a look at that. GBP, JPY. We did look at this last week, didn't I? And I saying 150 was quite a barrier, wasn't it, in sterling yen? So there we go. So I think, you know, and I think when did we say, was it Friday? I said if you want to be a buyer, there was an argument for being a buyer. But let's just take a look at the bigger picture. Bigger picture, 150 is a real ceiling in the pound against the yen. You know, it's not pushed through it for almost a year, so 11 months. So, you know, so any strength towards 150 looks like a selling opportunity. But I remember we looked at this on Friday because the market was down here somewhere, wasn't it, where we'd sort of pull back towards a low. You know, arguably it is in a recovery mode. On the shorter term chart, it's in a bit of a recovery. I wouldn't want to buy it here. If it drifts back to 145, then arguably it's a buy with a stop loss under 144 somewhere. So maybe in the short term, we're going to have another look at 148, 149. So maybe we'll see it squeeze higher. I would rather buy a sell-off if we got one. From a risk reward point of view, but 150 is a big hurdle on the upside for you're in sterling yen, you held too long. You never know. You might still get the opportunity this afternoon. What was the high? The high, it was at a high yesterday, 146.5 nearly. So it's about what 70 points below that. I mean, it is. I mean, today, I suppose, if you were holding it today, still in it today, it has held above the overnight lows, isn't it? The overnight low is 145.50. It's held above those. They've been a good level. So maybe we will get a squeeze higher, but based on the hourlies, I wouldn't want to buy it. I wouldn't want to buy it here because my stop loss would be below there. And it's maybe a bit too far in terms of risk versus reward. A friend just recommended I look at this site. Very sensible friend. How often do you do these sessions? We do these three days a week. So we do Monday, Wednesday, Friday at 10 o'clock. So if you click on the subscribe button, and if you're not subscribed, click on that. Click on the notification alarm bell. YouTube will send you a push whenever we go live. But have a look at the other videos we did as well. We did a video. I think a video went up towards the end of last week on the FTSE. We've got this how to trade forex course. I recorded the latest part of that yesterday. I think there are 3 episodes up already. So there's a whole load of other stuff on the channel on top of this these live things we do. Okay, that's it. So Watch oil this afternoon. Let's just have a quick look and see if that's done anything drastic. It's still going down. It could be interesting this afternoon, oil. So it's still selling off again from 60. So like I say, lows for the week, about 58.20 has been the low for the week. This whole 58 area has been big support for oil. It will be interesting to see what happens if it spikes into there. And US markets. So my preferred market is the S&P 500. But you know, it's pretty much the same for the Dow as well. Still selling off in the overnight market. Let's see what happens when it opens in about 3 hours' time officially. Do those lows for yesterday, about 6 o'clock yesterday hold. So I think it could be an interesting session this afternoon overall. Right, that's it. We are going to wrap things up there. So any questions you can leave on the recorded version of this video, which will go up as soon as I stop talking, I think, or drop me an email, david.jones@capital.com, and you can follow me on Twitter for charts and stuff. And I'm at Jones and Markets. Okay, that's it. We'll wrap it up. Thanks for coming along, and hopefully see you on Friday at 10 o'clock, and we'll see how much of an impact that German unemployment data has had on markets.